Welcome back, Alpha Hunters. Hope you guys are doing great today. I know it is Thursday, but I will not be here on Friday. I will be out of town. So let's go over kind of the big movers of the week already. We've already seen a lot of movement this week, so we can probably just go ahead and talk about it. I wouldn't expect much movement Friday, especially to what we've already seen from Wednesday of this week and Thursday of this week. So we can just kind of get into what was going on with the markets this week and figure out where to kind of go from here. But this will be an overview of really the week of November the 11th. I know this is going to come out the evening of the 10th, but this is going to be just kind of my thoughts about really kind of what's going to happen here over the next few trading sessions. So Monday so far of this week, we saw some pretty good just continuation of bullishness after last week's midweek sell-off, pretty much from the Fed, and then we saw some buying towards the end of last week. So Monday just kind of continued that. First half of Tuesday kind of continued that. Then we got to about that 385 level, which, you know, it's pretty much right at the bottom of that blue box zone, right? There's a reason why the bottom of the blue box zone was right where it was. There's pretty good resistance support there. And, you know, we didn't break through that initially on Tuesday. We saw a pretty decent sell-off, nice little rally then towards the end of the day. And then elections happened Tuesday night. Not much kind of going on. I kind of figured it'd be a little bit volatile right as we kind of came into this week. Tuesday might be a little volatile. Wednesday might be a little volatile as there was just some election kind of hangover, election news kind of going on. And then, you know, we were going to get to the big one, CPI Thursday morning. So we saw Wednesday a lot of bearishness come out there, right? We saw a lot of selling come out there. On Wednesday, we just saw kind of the market trade sideways the first half of the day and then just sell down a lot. And on the live stream, when we were kind of talking about this, kind of looking at it, one of the things we were kind of talking about was how much bearishness was out there. There was a lot. Like everywhere you looked, people were just, oh my gosh, here comes the death. The CPI is going to come Thursday morning. The market's about to be destroyed. Like you saw that headline on thumbnails and articles everywhere. Thursday morning comes out. CPI numbers were really good. We'll get into talking about what they were here in just a second. CPI numbers were come in better than what the market expected by far. The market jumped 4.5% on the open. On the open, got above Tuesday's high, traded down a little bit from the open, and then just kind of took off basically the rest of the day and really kind of accelerated in that last hour, just pushing higher into the close on Thursday. Really strong day for the day. And let's kind of just talk about it and kind of go through what probably is going to look to kind of happen here. We're going to look at the Qs here a little bit. I'm really watching some things on the Qs, but here on the SPY, I expect some choppiness, probably a trade higher here over the next few trading sessions. If you were on the live stream, did do this squiggly line graphic here, but I do expect it to go a little bit higher. Obviously, I adjusted it from what we were looking at earlier because of the last hour bullishness, but this was really weird to see how much bullishness kind of come in that last hour. So I do expect probably more sideways action here over the next few days. Not much, maybe a little bit of a pop, but probably some pullbacks. A lot of people, you know, looking to say, hey, you know what? We're not out of the woods yet. I'm going to take in some of this gains. Do expect some probably bullishness maybe a little later on, maybe early next week, that kind of stuff. But I expect mostly over the next several trading sessions, maybe the next week and a half or so, 2 weeks, see probably a lot more of a sideways pattern. I don't expect a whole lot of bullishness. And I've seen some people out there expecting, you know, possibly getting up to, you know, 415 on the SPY, possibly getting to, you know, above 400. And I'm not really a believer of that. I don't say it, oh, I'm a believer, baby. You know, the holy water believer. No, not that. Just kind of done my own analytics, and I'm just not really thinking that we get that high. We shouldn't get back above the 200 moving average on the daily, and that's what this blue line is coming down. So we shouldn't get back above that. If we get back above that, it's really interesting because we should only do that once we go into a new bullish market. So if we get back that high, that's a little bit different of a scenario there. And currently that, you know, 200 on a daily is around that 407 level. So yeah, if we get back that high, it'd be very interesting to see that. But that is another reason why the top end of that blue box is up where it is, right? Around that 405, 406 level, because I kind of figured as the 200 was coming down, that would probably be the max spot I'd want to get to. If it gets over 400, probably get like a couple point thrust higher and then probably comes back down as well. So we'll see how this kind of plays out, but I'm not expecting a whole lot more bullishness really. This might take a couple weeks for it to kind of shake out, maybe pop up a little bit higher or so, but I would expect this to probably mostly be done with this move that we've been in since October 13th, right? October 13th, the last time we got CPI data, we had a huge 2.5% gap down, and then we rallied 5% from that bottom of that day. So I think we had like a 5.5%, 6% intraday move from the bottom to the top on that day. So it was kind of interesting to see how much the market actually reacted to today's action, gapping up roughly 4.5%, 4% on the open, and then trading like another 1.5% higher. Yeah, I would expect a little bit more sideways action here on the SPY. A lot of things that had been working previously, like oil and gas, definitely underperformed the market today. McDonald's, we can take a look at some of that. Not going to take a look at all of it, but a lot of the stuff that's been working, energies, definitely underperforming the market a little bit here today. So you can definitely see some of that rotation, and big tech was clearly the winner today. Okay, so let's take a look at the Qs. Qs had a crazy bullish day. They were up over 7%, 7.4% on the day. And really, the big thing here on the Qs I'm watching has more to do with stochastics and MACD. Okay, so we are really close to taking out that October high. I really don't want to see us take out this October high, because the stochastics and how strong kind of been here lately on the daily. Would expect the stochastics to probably come out, take out this October high, and get into the overbought range here. Even if we go sideways, or even if we pull back a little bit here on the daily, I would still expect the stochastics to kind of trickle up into here. And if we don't take out the high from October, I would expect that to be a bearish, a hugely bearish divergence indicator. So I am very much watching that for now. But and that's something you can kind of keep track of. I really want to know if we take out the Qs high here, and maybe we do make a run back up to the blue box zone. I didn't think we were going to do that here a couple days ago, but today's 7% plus move, that's a really good move. I mean, there's not much kind of in between. Once it takes out that high from October, there's really nothing in the way of it getting there. So hopefully it doesn't take out that October high, and maybe it just kind of goes sideways and pulls back a little bit. And yeah, maybe the stochastics will just go a little bit higher here in the next couple trading sessions, and we can get that bearish divergence. So something you kind of want to be aware of is now that it seems like we have beaten inflation, right? It seems like the Fed has finally done its job. It finally cracked the inflation. It is finally starting to retrace back to that 2% level the Fed really wants it to be at. And what we can see is the S&P 500 rockets towards best CPI day since 2008 on Fed optimism. Here's what's interesting. 2008. Well, 2008 was not the bottom of that stock market, right? 2009 was. So just because we had a crazy bullish day today does not mean that we are done being bearish on the stock market. And the bear market still has plenty of room to where it can really move to the downside. So just be a little bit more cautious here as we probably start to get more of that economic data out there over the next few months and weeks coming forward. So what was kind of the big deal with the CPI numbers that came out Thursday morning was the fact that October inflation came in at 7.7%. The expected was 7.9%. So far this year with CPI, it hadn't beat to the downside. It had always beaten to the upside. And so the fact that we have a beat to the downside, maybe that means we are starting to see the inflation number finally pull back into the more target area that the Fed likes to keep it at around 2% or less. But what's interesting to know about this number of 7.7%. I'm not going to break down that whole 7.7%, but what that kind of says is the economy is so bad now is that prices are now starting to reflect the bad economy, right? The reason why a lot of people, a lot of traders, a lot of investors have been focused so much on the Fed over the previous several months is because more that they raised interest rates to fight inflation, the more they're going to have to damage the economy. Well, if the economy gets damaged enough to where it actually sends the economy into a recession, that's kind of like the double-edged sword, right? Do you fight inflation or do you let the economy stay strong? And the fact that the market is responding this positively to the 7.7% number of CPI kind of just says, hey, the Fed doesn't have to raise rates as much anymore, but that means that the economy is not as good now. If we're seeing prices come down, that means the consumer's kind of retracting a little bit. They're not out there buying as much. Or maybe they can't buy as much because they can't meet loan qualifications. So there's a lot starting to go on here. And just because this 7.7% number now means maybe the Fed will pivot on interest rates, doesn't mean the economy's okay. So that's what you need to understand here. And so watch for the market now start to respond a lot more to economic data, GDP stuff, unemployment, employment, production reports, and a lot of that kind of stuff. So be real careful about what you are expecting out of the market right now. So let's just run through a few stocks here. We're not going to spend a lot of time on some stocks. Start by looking at the big one, AAPL. Obviously had a huge day today, up almost 9% on the day. I was looking to get back into some puts here at the 145 level. I didn't see how much this moved up towards the end of day today. I'll go to a quick intraday 15-minute chart here. Look at the last 2 hours. AAPL just took off after it broke that kind of mid-morning high, and it just screamed higher. It went from about the 144 level all the way up to about 147, just taking any kind of bearish to town as it was just breaking out higher. So tomorrow, I think I said on the live stream, I was not going to add any kind of bearish positions or puts to AAPL, mostly because I was going to be traveling. I think I'm going to do that tomorrow. I'm going to put in an order to go back into the puts I'd already had. So I'm going to add into that position. If it winds up making it to 150, I'm going to add even more just because, you know, one day doesn't change the fact that it's in a downtrend, okay? So I do want to be bearish on AAPL, and I'm going to let AAPL just kind of do its things, but, you know, the options are going to be out for months. Not too worried about it, but that is one heck of a move there on AAPL. Next one we can take a look at is MSFT, Microsoft. Looking really good. Nice little breakdown here over the past couple of weeks. And yeah, I mean, it started to get bought back up earlier this week, late last week. Yeah, starting to look really pretty good. I would expect it probably just continue to trade down later on, but looking pretty good for now. And this would be one that I would be, if you're a longer term investor, I'd be snagging up some Microsoft. Honestly, I would be snagging up some Microsoft. They've been hit a lot this year, and they have a lot of profitable businesses that are going to go into the future and look just fine. Okay, so Microsoft to me looks pretty good. Alphabet, take a look at old GOOGL. I would be really kind of cautious here. They got some major resistance levels going to come right back up into. One's going to be around this 96 level. Even if it gets above that, you're still going to have the 105. So I'd be careful anywhere in that 96 to 105 level where all these previous lows were. You know, this thing's had some major breakdowns this year. So I'd be careful on GOGL, but had a huge day today, up 7.5%. Amazon, I don't really know what to kind of think about this one. This one's had some major breakdowns here recently. Obviously had a huge bullish day today. Like I said, big tech, you know, got back to roaring today. Up 12% on the day, but it's going to come right smack into these lows that it had back in the summertime around the 102 to 105 area. I would be real cautious in that kind of zone. Things aren't all clear, even though it kind of looks that way with today's rally. Let's look at TSLA, the old Tesla. Tesla had some pretty big breakdowns earlier this week. I'm not going to lie, this was actually pretty bad. Go look at a weekly here. we got below the low of March 2021. Okay, we did break down that low. We did snag below it and close below it just barely on, what is this, Wednesday? On Wednesday. And then Thursday, obviously, gapped up pretty good. And then there was a lot of selling that came in on TSLA immediately on Thursday. There was people that saw that and they were like, nope, I don't want to be involved in Tesla anymore. They just, it's just straight dumped positions. So the first 15 minutes, Tesla just got hammered. And then slowly and surely kind of just got back going the rest of the day, kind of just closed at roughly where it opened. We're pretty much at the day's highs. But I would be very cautious also on Tesla as it retests into some of these levels around 200 to around that 215 level. It's going to be real sketchy getting through some of that. Even basically where the line is here around 195. I would be maybe a longer term bearish on TSLA, but it's not one to be in on the short term because it would be pretty whipsawy. So that's a look at some of the big tech stuff. We'll just run through some McDonald's here. Going through the drive-through MCD. I would expect McDonald's probably broke this trend up today and is probably going to make a run back to the previous all-time high, which is back in December, January, and possibly August. Okay, this thing's probably going to come down and consolidate here a little bit. I don't know. Maybe it comes down a little bit lower if the market really gets selling. It gets kind of caught up in that. But MCD selling off as much as it was today just tells me, hey, this is, all these investors that have been in on this run over the past month and a half, they're locking up gains. So I wouldn't be really trying to buy MCD here. I would be looking for a little bit more of the pullback before you got bullish on MCD. But this is just kind of one of those things, McDonald's has been working. McDonald's has been working here over the past month and a half. It's been working really well. And you see big tech jumping today. And then some of those stocks that had been working over the past month and a half, they weren't working today, right? People are locking up profits. So I'd be a little bit cautious here as, big tech maybe had a 1 day pop. It probably carries over a couple days, but seeing some of the stocks that have, held up the market over the past, month and a half or so, not really performing that well today, right? ExxonMobil, it gapped up a little bit, but it traded lower and actually took out yesterday's low. It had a pretty good sell-off yesterday. So I'd be a little bit cautious if we start to go back to the stocks that were working over the previous month and a half and they start to break down. Where does that kind of leave us with the stock market? Because I don't think big tech's going to go on a rip-roaring rally here. I think basically today's one pop was a lot of people that have been bearish on them, probably short covering a lot of that. Yeah, we'll take a look at Chevron here. Chevron, same kind of deal. Not like a super strong day. ConocoPhillips, also not a super strong day. So yeah, I would expect probably a continuation of the pullback for a lot of these stocks that had been working really over the past month and a half. And we'll probably just see a lot of choppiness sideways. I don't expect a whole lot from the stock market as, we probably got the big move, a big answer to combating inflation. Inflation seems to be finally broken. Probably trickle a little bit higher just because of today's move was so large. A lot of people probably just look to buy it and try to hop on the wagon here over the next couple of days. I wouldn't expect anything crazy and major. And then investors are going to start to focus on the economy and how much damage has been done to the economy with the rising of interest rates. And if the Fed is going to continue to raise interest rates. Now in December, we are going to get another Fed day, and we'll see what they kind of say then. But I'd be cautious of trying to get long and jumping on this market rally here. I'd be a little bit more protective. I'm going to be looking to add to some bearish positions myself. We'll see though. It doesn't mean you got to do anything. You can definitely wait for the market to kind of roll over later on, and we'll see what happens kind of then. But if we kind of just go sideways, I kind of mentioned before the line in the sand was down here below this low on November 3rd. If we kind of go sideways and do what I'm kind of thinking we are going to look to do here, my line in the sand will then be today's low, which is, Thursday's low on November 10th. If we start to break that and I haven't allocated all the way into the bearish position I wanted to be into, then I will then add the rest, right? That's going to be my line in the sand, is that low. So I'll be adding to some bearish positions as we kind of maybe consolidate. It looks like we start to roll over, but if I haven't fully added into my bearish position, and we break today's low, that might be it. Okay, so but the line in the sand's still not quite there. It's basically, for me, it's Wednesday's low, which is on November 9th. But if we just kind of go sideways or a little trickle up over the next couple of trading sessions, I will be looking to move that line in the sand up to the bottom of Thursday's low. So that'll take care of it for me for this week. Y'all have a great evening. Y'all have a great weekend, and take care, F hunters.